Hi, welcome to the Market Alert for Friday, the 25th of April 2025. So stocks and bonds extend gains as Fed feuds fade. So obviously there's been some making up between Trump and Powell. US stocks continue to rally on trade-related optimism at market open. And stocks and bonds rise on trade optimism and dovish Fed speak. You can't make this stuff up, can you? That's what I said yesterday, all-time highs before the whole of the trade tariffs are cancelled in July is what I'm predicting. And retail sales today, Italian bank holiday and revised UOM, obviously the Italian one in observation of the death of the Pope. Yeah, so Trump's made it up. And I have no doubts that we're likely to see the trade tariffs either cancelled or compromised. I mean, he's making a right dog's breakfast of this job, isn't he? He's got a situation where he's going to have peace talks within 24 hours and tariffs galore, and yet they've all been postponed apart from China at the moment. So it's incredible. Well, maybe not. Who knows? Right, let's have a look at the markets and kick off with the Dow from yesterday. So we've managed to achieve it. We're above 40,000, closing above this yesterday. I'd expect more today as well. So again, you can see market down yesterday morning, but had no problem in moving higher for the remainder of the day. Like I say, this is not rocket science. It's no guess. It's just a repeatable pattern of the last, where are we now? 13, 14, 15 years. As they've continued to do this, market moves lower, they come back, buy the dip, move it up. They've got 10 trillion on the sidelines ready to hit the markets if they need to. They're going to reduce rates. Dovish comments from the Fed yesterday supporting the markets. So the only thing that Trump is going to get is a lower dollar and lower interest rates. So again, that's just perfect combination for the markets to continue to move higher and be overvalued. In the German DAX, still a bit more selling around yesterday as the market pushes to the upside or tries to. Again, not a problem. We had a bit of an issue when we opened yesterday morning, the market down a couple of 100 points. But look what happened after, straight through the high. The market will always attack the high. We've got the high here already for today. That won't be a problem at all as prices move high. You might get a bit of a sell-off at the beginning again like yesterday, but once it's found the support, it will move back to the upside. It's Friday. They don't like the markets down on a Friday. Let's have a look at the S&P. So in the S&P, we're approaching the 50 EMA, which I spoke about in yesterday's alert. So we're above the 5 bars, now above the 20. We just need to get through that 50. 30-minute, again, it speaks for itself, doesn't it? Market up. All of the averages in the right direction, above the 200, etc., etc. And yesterday's high is already looking favourable to continue higher there as well. The FT moving higher as well. We've got a V-shaped correction there going on. We just need to stay above that 50 EMA now. I don't think that's going to be much of a problem. It's all going quiet on the market front. It's the volatility is dropping, and the markets seem to be doing exactly, as I say, the repeatable pattern since 2008. Market down, market up, with the prospect that the Fed have got the tools. That's the key thing. They've got the tools to control whatever they want to control. So yeah, again, FTSE 100 moving to the upside. Just needs to take out yesterday's high to keep this madness moving in the right direction. So US dollar, this is also moving high. It's got to have a bounce. I suspect we're going to go back to 100 and over 100. And we've got to fill that gap as well. So expect more on the upside as far as the dollar is concerned as well. Let's have a look at the metals. And yesterday, silver was allowed to trade sideways to higher. It's down on the overnight. It's Friday, so it's smack down Friday. Expect silver to move lower during today. 30-minute chart, you can see already they've started their job, and the work to be done to move it back down to $33, I suspect, is going to be the sort of area. Certainly 33 but we're already at 33.50, so yeah, $33. Might see a test of this low that we had during yesterday. Again, here's your smackdown. You can't make it up, can you? 130, 230, market down, then brought back. So, but it's Friday, and we know they like to slam the market on a Friday. Meanwhile, gold is going to move lower as well. That's to be expected. Certainly in the region of 320, I would have thought 32.20, I should say. That sort of area. There's 32.27 or 3,200 down towards the 20 bar moving average. So don't be surprised if that happens. Long term, it's a no-brainer, but you can't make moves like this and not expect to have some sort of profit taking coming in. So there you can see yesterday as well the smackdown, but it came back, and overnight they smacked the price down as well. Finding a bit of support there. It's got to stay above yesterday's low, which I suspect it's going to struggle to do so during today. Right, let's have a quick look at the gold-silver ratio. So in the gold-silver ratio yesterday, yeah, I was expecting this. I'm expecting it to move back up again once more, and certainly get back above 100 as well. It's too soon for it to be allowed to move to the upside. It may do, but no, it's Friday, isn't it? We've got that pattern. We have the daily pattern of the market being hit at between 130 and 230, and then recovering. And then Fridays, it doesn't tend to recover. It just moves to the downside there. So yeah, that's as far as the gold-silver ratio is concerned. Let's have a look at yesterday's trades in the German DAX 2-minute chart. So yesterday the market was really sideways, as you can see there in the start, and then we remained sideways for some time before the market then capitulated and moved lower. As you can see there, then we had a losing trade on the long side, didn't want to go at that point. Then we had a short that worked out, and then we had another potential buy here, which, let's do that. We had a potential buy there that wasn't filled, the market coming down, taking that out. And then we had another short that was filled, and then a reversal. And then we started to move to the upside. And unfortunately, that bar was just outside of the criteria, as it was too high in range. And then we got left behind, which is unfortunate. But in the afternoon, we made up for this as the market continued to move higher with the Dow and never stopped moving to the upside, as you can see there, moving quite nicely up over 100 points, and then another trade to finish off just before 4 o'clock there, as prices then continue to hit, guess what, the day before's high. So there we go, and then the market just trading sideways and sticking to the high like glue. And again, you can see them coming in and buying the levels, particularly this one, and just to keep it above there. Right, so look where we are overnight, and we can see their prices below the high, but don't worry about that. That can be soon taken care of. It's only a matter of 70 points to the upside for this. So we'll look, see what else we've got in the way should the market move above the high. We should be seeing some R1s. There we go, got an R1 there. But if we get a bit of negativity, because the market is currently below the 200 MA, then on the downside, what have we got? So let's just have a quick look. DP is down there to possibly save prices on the downside if there's a bit of weakness at the open. Right, that's it for this one and for the week. Have a great weekend, and as ever, thanks for watching. See you in the next one.